Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris McIntire. McIntire Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for that common sense approach to planning for our financial futures that we all need. He is president and founder of McIntire Retirement Services. Chris McIntire, once again, back with us. Chris, welcome back.
Hey, good morning, Peter. Good to be with you. I hope everybody's doing well.
I am, Chris, and I hope you are, and hope everybody listening or viewing the podcast or the radio program today is as well. And we are in the midst of the holiday season, Chris, and this is a time of year where a lot of people start to think about improving their financial outlook for next year and making those financial resolutions. Chris, studies show that the majority of resolutions that are made actually have something to do with money or finance.
Oh, yeah, that no surprising details there for sure. And I think as we've gone through 2020 and the pandemic and the vaccines rolling out now, looks like 2021, I think we're all wanting a kind of a fresh start. So it's a good topic to talk to folks about today. We've got this whole different legislative shift and things like that. The politics have been very nasty. And I think we're all just ready to start fresh again and, start with a new savings plan, maxing out your 401ks and those types of things. And that's what we'll talk about today.
Yeah, Chris, if we look back to this time last year in 2019, a lot of people were making those financial resolutions. We had no idea what was in store for us here in 2020. So a lot of people maybe made a goal to improve their financial outlook, but certainly I could understand how it could be easy to have been derailed during 2020. So trying to get the ball back rolling in the right and positive direction here.
Absolutely, Peter. I think, I have a goal of going into a restaurant to eat. That's one of my goals. So, spending some more dollars, in doing some of those things. It'll be interesting to see how we unfold here, but we need to make smart decisions as we go forward here, as people look at, recovering from, maybe lost savings from the pandemic. Some folks, suffered pretty significantly with loss of a job, even if it was just temporary, or, kind of a panic situation. I'm going to hoard all my cash. I'm not going to invest. The market took a big dive back there in March of 2020. It recovered quite nicely. But again, there was that, fear of missing out drove the market up. We had a significant government stimulus packages that have rolled out as well, some extension of unemployment benefits, a crazy election cycle. So getting back to a more normal, putting money in on a monthly basis, back into that budgetary side of things as, we hope life normalizes going forward here, Peter, but we want to make sure that things are achievable, that they are measurable, that we can be accountable for our actions as well. And I'll give you a good example. I had a meeting with a client here with the advent of Zoom and everything and people being on lockdown. We've actually had much more interaction with our clients here this year than ever before. We haven't been out marketing and, doing things like that. So we've been more, client focused, I guess you would say. And, and I said to the one client, I'm like, you can really see the different measurable results here, having this accountability process here with some more interactions and whatnot. And it was, it's kind of a client I lean on for some advice as well, and from a business aspect as well. And that's the nice thing about, the business that I'm in is, we work with a lot of financial professionals and, people that held pretty high positions at various companies. So, it's a great process for everybody here to go through.
Well, I think that accountability is a good part of sticking to a resolution. Chris, we've kind of made the comparison before of physical fitness and financial fitness, and having an accountability coach, having a personal trainer on the fitness side helps you achieve your goals and do the right types of exercises and have somebody who's pulling you along. And the same thing is true on the financial side. Having somebody who is holding you accountable, who is talking ideas through with you, who's showing you the right ways to do things are going to help you achieve those goals goals. And ladies and gentlemen, if you're looking for that help, that assistance, if you're looking for that financial coach, if you're looking to get that plan put together for what you need to do or accomplish so you can make smart goals, specific, measurable, achievable, relevant, and time-bound goals for 2020 and beyond, pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194, 800-868-1194, 800-868-1194, or you can go online, McIntyreRetirementServices.com, McIntyreRetirementServices.com. And Chris, I know that a lot of understanding how we can make forward financial progress is in just the minutia, keeping out of debt, keeping a smart budget, sticking to a realistic budget. And even those simple steps you help people with in your practice there at McIntyre Retirement Services.
Well, certainly, and Peter, we call it, kind of a SMART, to use an acronym where it's specific, measurable, it's achievable, it's relevant, and time bound. So it's very smart. And, like you say, pay off that credit card debt, start working on it and sticking with that monthly budget, add money to your emergency fund, regularly invest into your 401k platforms, stop trying to time the stock market. I work with
That's
a lot
big
of
one.
different, I work with
a lot of people were trying to do that during the pandemic, especially. I think it created more day traders than maybe any other time in history.
Well, and, you start looking at the presidential election and, all the news feeds and, and things that everybody's, seeing across social media and whatnot. And, it's the worst thing in the world to try to do is to time the market. If you stick with a long-term investment plan that is built around your overall risk tolerance, you're not going to miss the best days of the market. And when you get out of the stock market, you're typically going to miss some of the best days that it performs, because that's when you know when to get back in. Typically, the average American investor is not a sophisticated algorithm driven type of formula by any stretch. So, we want people to continue to invest more money. And so we've had a lot of conversations with people who are getting ready to within a couple of years of retirement or just getting ready to retire throughout 2020, Peter. And, for some of them, let's say they got a 5-year time window and they're like, look, I'd like to take some of my 401k dollars and make them, less risky with stocks and whatnot. But what do I do with the money I'm putting into my portfolio? So a lot of folks, we have moved them into a little bit more conservative investment with the bulk of their life savings, for example. And then, as they're continuing to add money to it, there's where they can add into the equity stocks, the stocks and, the mutual funds, that type of thing that can deliver more growth. But that's what they're doing with their contributions, not with their overall asset piece, if that makes sense, Peter.
Can I paraphrase here or restate that just to make sure that I understand? Chris, we are able to differentiate between kind of the bulk of the existing money that's already saved and invested in the 401k and allocate that with a different risk assessment or profile than the new contributions that we're making. So in other words, if I've got $1 million in my 401k, but I'm investing $1,000 a month, maybe I don't want to be as risky with the million as I am with the 1,000 that I just put in.
That's a perfect analogy right there. Yep, my bulk of my assets I'm going to save that I've accumulated, but I'm going to risk that, $1,000 a month, like you said there, Peter. And that makes perfect sense because you're dollar cost averaging. If the market takes a dip, that $1,000 is going to buy more shares of Microsoft, for example, than if Microsoft is, rebounded 40%, for example. So, that'd be like rebalancing your portfolio. We do that on a quarterly basis for our clients and to make sure that the stocks don't get ahead of the bonds, if you will, because typically, stocks are going to outperform bonds. So if you wanted to be in a 60-40 portfolio, 60% stocks, 40% bonds, and the stock market's done 20%, well, you're not going to be 60-40 at the end of the year. You might end up being 75-25 because your stock values have increased. So that's where that rebalancing comes into play. Then if the stock market has a significant decline, well, you've rebalanced and you're within your overall risk tolerance. And, I think today, Peter, and I'm sure you'll agree with me as well, most folks look at what their statement was 1 month ago to where it is today. And they're looking and, they're investing with a short-term mindset with long-term dollars. And that's a very dangerous thing to do. And,
we have short attention spans.
yeah, my
Just
wife
a sign
could
of the
attest.
times.
My wife would attest to that, and probably my staff too. But it comes with the turf. But again, not saying, people will email me, boy, it looks like the market's going to do bad this week. Should we get out? And, all of a sudden the market does good. And right around the election cycle here in 2020 was a perfect example. Everybody was, not everybody, but, a lot of investors were very nervous. Heck, we didn't even have a determined outcome, even a week or two after the election. And the market still went up, had a fantastic month of early November, through the month of November was a fantastic month for the market. And everybody thought it was going to, correct severely just because of an election, and it did not.
Yeah, betting against the American economy, or at least the American markets, is always kind of a dangerous play, I think, Chris. And you've got to segment your money. You've got to identify what you're willing to risk and what you're not willing to risk. But with what you're willing to risk, trying to time the market and go in and out on a whim or on the right day or at the right hour is not usually the most winningest methodology that there is.
You're absolutely right there, Peter. Staying with your long-term risk tolerance with your goals and objectives. Your goals and objectives typically don't change on a week or a month-to-month basis. Those are longer term. And, we tell a lot of folks, look, stop watching the news every day. That stuff will drive you crazy. Go out for a walk. You got to change that type of scenery. And, emotional type of investing can be very dangerous. So that's that's not part of the SMART program there. Nowhere in there did you see make emotional decisions, make logical decisions.
Well, Chris, you mentioned the difference in the allocation for your current money versus your new contributions. Is that a pretty effective method for both controlling risk and making gains in forward progress?
Absolutely, because you're going to be doing a rebalance from time to time, and you're going to kind of be shifting some of the gains off of the table, if you will. And will you miss long-term opportunities? No one knows. And, but as you get older and you stop adding money into your portfolio and start taking money out of it, you have to watch those significant corrections in the market. We call that sequence risk. And you have to mitigate that as you go throughout your retirement, because, I think, given the 2008 financial crisis and then the pandemic here in 2020, those are really, a couple of short-term months in there that delivered the pain. We haven't had that prolonged economic slowdown like in a 2000, 2001, 2002. That was a 3-year, a pretty significant correction in the market over a longer period of time, and it took a very long time to get that money back. And that's where you get into that risk, that overall risk profile of sequence of returns, inflation risk, with the bond side of things. So, sticking with your plan and understanding where is your overall risk tolerance. And, I always got to do this every radio show, Pete, it seems, is that, look, we advocate safe money strategies for people in retirement, and none of that has ever changed during bull markets or bear markets. You have to have some safe money that you can rely on in case your risk money things don't work out.
Well, if you would like some help, some assistance, if you would like to review or evaluate your current plan, or just an investment or an account that you have, or take a look at the holistic comprehensive picture, pick up the phone and give Chris McIntire a call, 800-868-1194. That's 800-868-1194, 800-868-1194, or you can go online, request some help and assistance at McIntyreRetirementServices.com. Even if you have just a quick, direct financial question on your mind. Should I be doing Roth or traditional contributions to my 401k? What's the best time or age for me to claim and collect Social Security. Chris can help to analyze those decisions with you, for you, and give you some direct answers and guidance. Again, 800-868-1194. Obviously, just a couple examples there. Chris, you mentioned rebalancing a few times here. How important is regular rebalancing to our long-term success? And should we make that a resolution to check up on our accounts and rebalance them on a periodic basis? Because I know a lot of people they make the allocations and decisions when they get into the 401k, and then they don't really rebalance maybe for years or decades.
Yeah, you're absolutely right. And for some folks, that just ended up working out very well for them. Throughout their retirement, that next decade, that may very well work against them. So what worked in the past may not work in the future. And we always advocate rebalancing portfolios. And, we do that on a quarterly basis for our clients that are in our model portfolios, if you will. Some of them have some outstanding satellite pieces where they say, hey, this is my long-term growth piece. I'm going to let this ride over time. But in my, the bulk of my nest egg, my 90% of my money that I need to live on, we want to rebalance that on a quarterly basis and keep that stock, bond, real estate, gold relationship, within that risk profile. And that's what delivers long-term financial success.
And so you're doing that in the accounts that you help your clients manage?
Absolutely. And that's part of our fee-based money management program.
Well, if you would like to get help and assistance there, maybe not everybody is going to log in and do that rebalancing or would know what to do. Or even if you do, if you want somebody else to sort of handle some of that for you or talk through those decisions with you, Chris McIntire is that resource, a fiduciary independent planner, and he is here to help and assist. 800-868-1194, 800-868-1194. Another resolution, Chris, might simply be to keep track of everything, to track my net worth and where I am and where I'm going over the next year.
Absolutely. And, many folks can do that in an Excel spreadsheet or some of the nice software that's available through like AARP, if you will, where you can put in your budgetary items and put your account balances on a monthly basis. And, we even have tools where that stuff gets inputted, or a feed, if you will, and populates automatically for folks. But there you're tracking your net worth, and you can say, hey, you know what? The stock market did real good over the last quarter. We've got an extra $15,000. Why don't we go ahead and let's put the roof on the house here, and let's slide that $15,000 into our money market or a short-term bond account, for example, and we'll use that to pay off that, to pay for the roof or repairs or whatever you want to do, go on vacation or something like that.
Which, Chris, some other resolutions that we might want to consider for 2021. And remember, folks, you don't want to wait till January 2nd to start on these. You want to start on them now so that by the first week of the new year, you're well on your way to making progress. But checking in with our advisor, Chris, you mentioned that over the course of this year during the pandemic, you've been checking in with your clients much more frequently.
Absolutely. And, I suppose it, for a lot of different folks, this has been a kind of an eye-opening experience here, knowing that we can work from home, we can work remotely in our business. We haven't skipped a beat here, and, but we've developed other processes to stay in touch with current clients, to put them at ease. For example, they're used to coming in for reviews and sitting across from the conference room table. So modern technology has certainly helped that for.
Well, I have to say, Chris, that a lot of people probably have not heard from their advisor as frequently or at all during the course of this pandemic.
I suppose you're right there. And, it's something we've always modeled our business practice on is, if we take care of our clients, they'll help take care of us, makes it a nice win-win situation. And I'll go back to that rebalancing of the portfolio on a quarterly basis. So, we're a fee-based money management platform where our clients pay us to manage their assets with them. When we do a rebalance, that doesn't cost them anything. That's what part of wealth management is. It's not a transactional base. We don't get paid to buy and sell. And, we just don't believe in that methodology. We represent a fiduciary responsibility with respect to managing our clients' assets. And Peter, I'll be honest, buddy, I love it when they call me and they want to ask about, hey, I'm thinking about buying a car. Should I pay it off, or I can get 0% financing? Or, we want to start something for the grandkids. Or, they call with some questions that aren't specific to maybe us managing their money, but they lean on us for that kind of sound advice. And, when you do what we do for a living, you see lots of different experiences. So you get to see, and to reflect on some of that experience. And, I've got a couple of gray hairs on the side of my head. My wife calls those distinction marks, if you will. But we've been around a while. So we've seen a number of different things here. And, we're open to the new technologies that are out there that some folks shun. But we've also been around long enough to have some experiences through good times and bad times as well. And that's probably gives us a little niche in the overall marketplace.
How about updating legal documents, Chris? So a lot of people probably don't have them, or maybe are years out of date. Maybe the pandemic shines some light on the necessity to update those a little bit more frequently. Absolutely. Or get them together.
Yeah, you're absolutely right. Not everybody needs to have a full-blown, multiple trust type estate plan, but you need, powers of attorney for finances, for healthcare, living wills, the HIPAA documents, who can get information on you if you went into the hospital. Some of those basic documents, transfer on death, avoid the probate process, and we assist our clients with that as well, whether they use some of our legal service relationships that we have already established, or if it's just encouraging them to go and contact a relationship that they've had in the past that they're comfortable with. As long as they have that in place, the smoother we can make that transition when something bad happens, it's much easier on them. And then also their beneficiaries, because those are the people that are going to be taking care of those items.
Well, again, these are all things that Chris McIntire can help walk through with you, make sure that you are taken care of, lots of financial priorities to get that plan put together, that he can help and assist. He can prioritize for you. Put that checklist together, put the plan together. 800-868-1194, 800-868-1194. Just a couple others, Chris. Review, update, get life insurance. I think, again, some light was shown on our lack of or underinsured nature during the pandemic. A lot of people scrambled for that at the onset, and still, I think a lot have not secured appropriate insurance. Identity theft protection, credit monitoring, shredding older documents, starting now. Don't wait or procrastinate. Finding higher interest rates on savings or savings alternatives. Chris, that's another area where you help your clients with a great deal. Is there's a lot of money that's earning next to nothing right now that people would like to at least get a little bit more horsepower from.
Yeah, especially this year, Peter, I would say more than any other year in my career that I can remember, is we have done more, CD replacements, if you will, because, somebody might have had a 5-year CD that was paying 2.5% that renewed at 0.5. And, we've done a couple of shows on this, and we certainly have some other quality alternatives to those types of pieces, for that short-term dollars that people don't want any risk associated with.
Well, Chris, if somebody's getting 0.01% or even 0.5% on their savings account, you can help them identify some of those alternatives that might earn them a little more.
Absolutely, Peter. We have a number of different alternatives that are out there for them, from the short-term side of things to middle-term to long-term types of investments and products to put those assets into.
How about eliminating fees, reviewing that risk? Those are also things that you can help people with. And running a retirement estimator, kind of mapping out what that retirement might look like.
Absolutely. Yeah, we use a nice program called Retire Up, and that helps, put things in there like inflation, like taxation, different stock market scenarios. So kind of like a Monte Carlo software system, if you will, where you can run a number of different situations in there. And that's a good one to look at, when you can do it live in real time with people, and even over Zoom, it's very easy. We do screen shares like you and I are doing right now, Peter, on the podcast here. Is, say, look, if something happens here at age 70 to one of you and you lose a pension income and a Social Security benefit, can you see the impact that has? And then they say, okay, yep, we get it. We need to offset that or mitigate that risk, if you will. And maybe it's a term life insurance policy, for example, or a whole life policy. You know, the one where most people miss out on, Peter, is the long-term care expenses on that, because, you know, Medicare doesn't pay for us to go into a nursing home for 3 years. You know, that's a short-term piece. Medicare is typically hospital and doctor side of things. And before you can go on Medicaid, you know, you have to spend down your assets. So that's an area where many people have missed the boat on planning there, and we do a lot of that. And you know, that long-term care industry, we've done shows in the past year, Peter. You know, and you and I both know, being in the industry, the new long-term care products that are out there are nothing like the old ones that might be in existence, where your premiums are increasing year by year, and it left a really bad taste for, you know, basically a generation of people. But you know, they've made many alternatives to make those products much more user-friendly, and it's not a use it or lose it scenario anymore.
So perhaps that should be a resolution to take a second look, even if that's something we've reviewed or considered before, Chris?
Yeah, and you need to do some of these things while you're healthy. You know, you can't say, hey, you know what, I just had I got diagnosed as a type 2 diabetic, I'm taking insulin, or I just had a stroke, now I need to get some long-term care insurance. Well, if you're an insurance company, you know, your job is to manage risk, not take it on.
Well, again, if you need help with that, if you want to make sure that you have reviewed all the available options, and there are many new options that are available and on the table that may not be the same old use it or lose it, or you don't get benefits if you never have that kind of long-term care need. So let's take a fresh look at this again with a new perspective, new products, new strategies available. Chris McIntire can show you what is available, how that area has evolved. 800-868-1194, 800-868-1194. How about tax law changes? Chris, I know last year at this time, we didn't even know that the Secure Act was right around the corner. Then it was basically the first piece of news of 2020 was they passed sweeping changes with our IRA accounts. The Secure Act changed a lot of things. Now, of course, other news happened in this year that sort of swept that under the rug, but maybe it's time to look at our tax situation, our tax liability, run a tax estimator, and consider some conversion strategies.
Yeah, that's some of my favorite things that I like to do. Is, you know, I'm kind of a tax geek here, is to help people do Roth conversions, but, you know, to do some tax planning just in case taxes are going to go up at some point in the future. And, you know, most of us would agree that, you know, in the long run, taxes are going to go up significantly. The Secure Act almost helps accelerate that, because if mom and dad pass away, their IRA has to be distributed to the children or whoever their beneficiaries are within 10 years. They can't stretch it out over the next 25 years. So that money's going to start being accelerated, and you pay tax on an IRA at whatever your income tax threshold is. And nobody listening to the show today, not me, not you, Peter, none of our listeners know what income tax rates are going to be in 10 years.
And Chris, it's where they gave something on one hand, they take away with the other. They gave us an extra year and a half before we had to start taking money out of our IRAs and tax deferred accounts. Most people were doing it anyway. It's only a certain few that kind of default to when the IRS mandates that you must take money out. But for those individuals, they gave us an extra year and a half. However, they eliminated essentially generations of available tax deferral with that stretch IRA having been sunsetted. And now any plans that we designed before January 1st, 2020 really need to be revisited so that we can achieve the goals that we once had plans for.
Yeah, no question about it. You know, two things in life are certain: death and taxes. And, you know, you have the ability to at least control the taxation side of that.
Oh, yeah. And now it seems that we're going to be taxed even more after death with making that requirement to liquidate IRA accounts within 10 years of passing it to a second generation. Chris, I think the IRS knows what they're doing here. Without proper planning, they're going to collect significantly more tax revenue.
Yeah, Peter, and it's a very tax-friendly environment right now, from capital gains, which would be like on non-IRA type accounts, to the income tax side of things. Very, very friendly. You have much more control right now than you have at any time in recent history to, put in a tax plan in place to be the most efficient. We're not talking about that you can eliminate it, but you can control it and do it more efficiently. And who wouldn't want to do that? Most folks, I guess, would say they are very much, reactive instead of being proactive. And folks, this is one area where it would make sense for you to be proactive, not reactive.
Well, pick up the phone, give Chris McIntire a call. That's the first proactive step, and we can outline how to achieve your goals into 2021 and beyond. A lot of people making those resolutions, or will be within the next couple weeks, on how to improve their financial outlook into the year to come. Chris McIntire certainly can help you with those efforts. Pick up the phone, be in touch, get to know Chris. Ask just a few questions over the phone, understand a little bit better about his philosophy, about his methodologies, about his strategies, about his costs and expenses. He can explain all of that to you and with you, and then can decide whether it's appropriate to go into some planning and put a plan together. By the way, that is free of charge. There's no cost, there's no obligation for that initial review and strategy session. So really no downside to placing this call, no reason to procrastinate. There's never any benefit from that. Pick up the phone now and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194, or visit McIntireRetirementServices.com. And Chris, we always appreciate your time here on the program. Thank you for being here as our guide, and Merry Christmas and Happy New Year to you, buddy.
Hey, Peter, it's good to be with everybody. Please stay safe. Merry Christmas, and God bless America. Thank you.
Visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.